Eric, welcome to the show today.
Michael, thanks for having me. My pleasure, man. I'm excited to be here.
So it's cool. You're in Barcelona by choice, obviously, and so that kind of feels like financial freedom to me. And I want to unpack how you got there. How
Love
did
it. Yeah.
very quickly how did you get to Barcelona?
Bought a bunch of real estate with a bunch of good people, and my wife and I decided we wanted to move somewhere. And long story, we picked Spain, and then maybe even longer story, how do you pick a spot within a country, right? And so we picked this part of the coast. We're actually about a 45 minutes south of Barcelona because we have two kids. So we live in kind of a beach community. And man, we got lucky in a lot of ways, but that's the very fast story. We can dive deeper, of course.
Yeah, so what I'm hearing is you bought a bunch of real estate and it gave you a bunch of options, and now you're in Barcelona, big on a beach town. So
Yeah, I'm the person who's sipping some cocktails and they make fun of, but the goal was always to work myself out of work. I'm an engineer by trade as well. That actually quit maybe 3 years ago now. Same story. I just sort of worked myself out of that job. And then we wanted to live abroad and we wanted to show our kids a different culture and language. And so we're like, let's go for it. So that's what we
that's
decided.
interesting. Well, let's talk about when did you get started in real estate, and how did you kind of get started? It may not have been in what you're doing now, but let's rewind the clock a little bit. And when was that? What was going on in your life? Why were you looking at real estate, and kind of what was your very early forays into it?
I think, well, I mean, I have a longer story to tell here than probably you want to hear, but originally I bought a house in college, kind of a long story. We flipped that one, and that was really cool. It kind of introduced me to the power of it. But it took my wife and I some time later. We had moved around quite a bit. We actually traveled in a car for a year, and it's a longer story. But after that, we sort of settled down. We're like, okay, let's start working. And I started this engineering company, and I thought that by starting my own company, I was like this entrepreneur and I grabbed this freedom, right? And it turns out I was still trading time for money and still felt like I was on this hamster wheel. So probably like a lot of your listeners and a lot of people in your group, they feel like stuck within their job or maybe have a rental or two and kind of look in the scale. So what we decided to do was, I just heard more and more and more about real estate. So we started buying single family homes. I think a lot of people have this similar story, and it became unscalable really, and that was kind of the issue, right? So we were buying even with creative financing, we'd buy like owner financing or low money down and stuff, and it just became a lot of work and not a lot of scale, and so we made the jump to multifamily,
I want
and that was huge.
Eric, I want to dig on this. I mean, obviously, you're kind of a multi-family show here, but I think a lot of people do what you have done or are thinking of doing that. In fact, we're having a lot of conversations with people who have real estate on the brain, and maybe we can shave off a few years of misguided investing. And I do want to talk about that a little bit. I mean, your idea was you were buying rentals. Your plan was what, to buy one a year or something like that?
You nailed it. I think everyone has that plan. I was like, I'll buy one a year for 10 years and maybe I can retire a little early. That was really the goal. I was
And,
like, I'll achieve financial freedom 10 years from now, maybe.
and it's not a bad plan, right? Because most people
Yeah.
are on a 30, 40-year retirement plan, and at the end, they actually don't even have enough money to actually really retire. So, a 10-year retirement plan is already vastly better than the average person. But I don't think a lot of people really think about how long it will take to get there, even with real estate, and how much work it will be. So you obviously wanted to experience the pain for yourself, and so when you bought this one rental a year, let's talk about that a little bit. How much money was it generating actually?
I mean, it. I lived in Durango, Colorado. So now, like I said, we live in Spain. But in our market, basically none. I mean, there was very little cash flow because the purchase price was so high, and part of it I didn't really know what I was doing. If I'm being totally honest, I was just buying real estate because I thought it'd appreciate, and luckily it did. But honestly, it wasn't spitting out any cash flow. In fact, it was probably going the other direction, right? It was taking a ton of my time because I was managing them myself and it really wasn't spitting out a lot of cash flow. And then luckily some of those appreciated. There was some luck involved. I would say, for me, I didn't realize the power of partnerships, and I was super fearful of that. So I was buying these rentals and I had this sort of plan. The timeline accelerated a little bit because I was the type of person who was like impatient, And then I also learned about seller financing. So I was like, oh, okay, well, this older gentleman I met, it's kind of a cool story. He ended up selling me a sixplex on seller financing with a low money down. I was like, oh, sweet, I can get a 6 unit. This is amazing, you know? That 6 unit cost me so much time and so much effort. But it was worth it. I mean, it was super cool. And I do think I do think, a lot of cases buying one single family or maybe house hacking or some other tool to get started is a good way to get in. But I think ultimately, and I think a lot of us who are in real estate for a long, long time realize the multifamily is really scalable, especially if you're doing the syndication model where you're using investor capital and you're really doing it right with the debt side and buying the property right. There's a lot of things you need to do right. It's a more scalable model. And so for me, over time, I just came to realize, okay, instead of buying one at a time and managing all these, I could buy 100 unit and have a team and rely on other people and come together and, provide good returns for our investors.
I want to get there eventually, Eric, but okay, because there's still people caught up in the single family house investing. I think one is a very relative little cash flow that rentals can generate. Now, in your case, it didn't generate much of any, but you felt like real estate was somehow the ticket out because you assumed, probably rightly so, that it would appreciate. And real estate does actually appreciate. So therefore, every single year you're building up equity. Though it's not probably nearly as meaningful as it could be from a financial standpoint. But let's talk about the work. Why do you not hire a property manager? Why does almost every single family rental rent landlord self-manage? Is it because we don't know any better, or why don't we hire property managers for it?
In my case, it was basically because I couldn't afford it. And so this is what I always tell people. A friend of mine coming into the business, he was asking about single families and he asked about managing. I said, look, I think managing one property or again, like a house hack, I think is a good way to learn a lot. But make sure that you can afford the manager when you do the math, right? Like put in 10% for the property management. Then if you decide you don't want to manage anymore, sweet, you've got this kind of gravy. But for me, it was just because I couldn't really afford it. I was already a little bit too thin, and I really was like wanting cash flow. So I'm like, okay, I'll manage these. In reality, looking back, those weren't good enough deals. They just weren't. And that market's a really kind of a tough market to make cash flow. So I think, and I will say, a lot of markets are that way. So if you need to go to a different market or something else, that's fine. That's a whole different story. But essentially, for me, it was just basically like, one, I maybe didn't know any better, and two, glutton for punishment, and then three, just really couldn't afford it.
So that's a good point because typically they'll take 10% of rental income, right? Something around that.
Yeah,
You
eight
have
to
a
ten, usually 10. Yeah,
10, and if you have skinny cash flow to begin with or none, you're like, well, I'm just going to go in the hole. And so therefore, since I can't afford it, I'm just going to do it myself. And now you're dealing with all that stuff. And now what about risk? I'm just going through kind of a checklist in my brain,
yeah. No, this is awesome.
different kind of, because people are like, they think that there's different real estate strategies that they can pursue, and there's even short-term rentals and co-living, right, and stuff like that. And I just want people to be clear about what they're using to get to the promised land. Like my case, I try to flip myself to financial freedom, but of course there's nothing passive around flipping. And it took me 3 years to figure that out after flipping 3 dozen houses. I'm like, wait a minute, this is not very passive, right? And so to me, I don't know. Again, most people don't really think things through. Now, what about risk? Let's talk about risk because there are always risk with something. How do you assess the risk of single family house investing, for example, to some other stuff, maybe multifamily? What about from a risk? Are they about equivalent in your mind? Is one a little better than the other? What is your assessment of risk of rentals?
I mean, it's all market driven and it all depends. So it's like kind of the simple engineer answer, right? Like, well, it depends on where. But generally speaking, I mean, you start thinking about the math of it. Like, again, engineers, analytical people are going to kind of head that direction. Basically, what I'd say is if you have a single family and it's vacant, you're making zero, right? That was always the pain for me. Is like if someone would skip, like I had a tenant who just bailed and you're like, oh man, and then it was kind of trash, right? So you got to put in money to fix it up, you're losing a month's rent. Usually there's a pretty big risk of a total year's loss if one tenant leaves. If you have a 100 unit, you have one tenant leave. I mean, it's annoying, but on the grand scheme, it doesn't really matter. The other thing is, if you think about if you, again, market shifting, right? Let's just say the worst case scenario, what I like to think about. What's the worst case of a 100-unit apartment building in a good market that's a decent property? Usually it's going to be some sort of downturn, right? But what happens in downturns? People kind of level down their living. So if you have like a B or C class property, someone may be coming from an A class or even from a house and they're selling their house or moving into apartment. I find apartment investing to be one of the least risky investments out there for that reason. Again, you need to buy right, you need to know what you're doing, get educated, be in the right room. But I find it to be significantly less risky than single family investing. And the other thing about single family is it's so driven by emotion. So it's someone walks in there and they like the kitchen, the backsplash, or they don't, or the neighbor's house. Let's say the neighbor's house is sells for a lot, whatever. Then that it's so market driven, based a lot on emotion. The thing I like about apartments, it really is you're buying a business. You're buying a business based on how the NOI is performing. So you as the owner have the ability, we call this value add. I mean, I'm sure you said that 10,000 times on this podcast. You can push value. You can add value to that in an easier way, in my opinion, than you can in a single family. So as far as risk is concerned, I think you look at market metrics of how things have performed historically. Apartments have performed generally better. And also, one vacancy means very little to a property. One vacancy in a single family, you're out of money completely, right? So I think I've kind of made the point. In my opinion, risk profile is so much lower in multifamily.
And maybe some high net worth individuals here listening to this. And in fact, we've noticed that the majority of our limited partners, investors, they actually try to invest in real estate themselves, right? So as far as you're concerned, are there other ways for LPs to invest passively in single family houses, or is that also a non-starter? Forget this active stuff. Is there any way I can invest passively in single family houses?
I think the best way to invest passively in single family is to find someone who's very good at that. So let's say someone's a single family acquisition person and they have quite a few of these. Like a friend of mine does this in Lubbock, Texas. He just buys single families or duplexes. And he's very successful at it. He's vertically integrated. He has a whole team to buy these single families because there's a whole lot of them in that city. And so they have investors that they'll take on in certain scenarios. If you invested in more than one, for example, that's a good tool. Another tool would be, like for you, used to be a flipper, you said, and I've known that about you, Michael. You flipped like 30 houses, right? If I remember right. Um, if there was someone who invested in the first position loan, you could get a pretty good return plus some points. That's a pretty risky endeavor too. If you're looking for a low risk passive investment, it is much harder in a single family realm. So as you're saying, if you're a high income earner and you're listening to the show, being an LP on multifamily or self storage, in my opinion, is a way better way to go than to try and figure it out in single family. It's just more risky because again, there's only one property. So if you invest with a partner who buys a single family, it goes sideways. That's it, right? If one portion of a project in a multifamily goes sideways, you're usually not out that much. The other thing about multifamily, so let's say you're investing with Michael, there's probably deal after deal after deal. You could spread your money over several deals. That's what I tell our investors to do too. Hey, if you want to invest 100 grand with us, cool. Maybe consider investing 50 in this one and 50 in the next one, just as a starting point. So you have a little bit more options with investing with you guys, in my opinion.
So you were getting frustrated with your plan, right? And now, did you know about apartments? Like, did you know about the strategy of apartments,
No,
or
definitely not.
you did not? So talk to me about the progression of going where you are right now. How long did you pursue this rental strategy, and then what happened? What happened when you started making transition? Talk to me about that because a lot of people don't make that transition ever. Okay, or it takes them too long to make the decision. So I want to kind of see what that process was for you.
Yeah, I love that question. For me, I got a little, I mean, I feel like there's a lot of luck that played into my, honestly, like my trajectory to this point. But I was buying single families and then I acquired 6 units, so to speak. So I had the sixplex, we had a duplex, we had some other stuff, and I was self-managing. And then I heard about this real estate meetup in my town. I was like, oh, sweet. And I was like, this is perfect. I went there and then I met this guy who was doing syndications. And I was like, wow, what's that? And my first thought was, first of all, I don't want to partner with anyone because I know it all and I'm smart and I don't want to give a work. And that's totally foolish if you're listening. And the second thought was that's too hard for me to do or too much work for me to do. So I was kind of like rejected the idea at first. Then I got to know him and I was like, oh, okay, like actually this is a pretty cool setup. And you get to do all the work. The investor gets to put their money in and gets to grow their money with you without having to do all the work, without having to be an expert. I think that's the best part about being an LP. You don't have to be all that educated in real estate. But for me, I found this gentleman, and it turns out he was willing to be my coach, so to speak. And I didn't know anything about coaching, didn't know anything about multifamily, but that's the one piece of advice I always tell somebody. If you're interested in becoming a GP, if you're interested in multifamily at all, one of two things you must do, in my opinion. Either hire a coach or be in some sort of mastermind or group or both. And that's the accelerator. It's about the only good way to get in. So that's why, I just got lucky in the sense that I was like, you know what? I don't know what I'm doing. He's done this a bunch of times. I'm going to hire this guy and let's go and see what happens. And with his mentorship, I was kind of able to put my foot on the gas.
Now you said yeah, you thought it was going to be too hard. Now, why did you still move ahead with that, right? Because the other thing, obviously, I can do this myself. I'll ask you about that second, but how did you overcome the thought that it was going to be too hard? Like presumably much harder than what you already were doing. How did you overcome that in your mind?
I think that's a good question. It's funny. People say that to me too, because like I teach this as well now, same as you. Like I coach people and teach this. It's one of the objections you hear all the time. It's like it's so hard. Like honestly, it's kind of not. I mean, there are things you need to do, and I'm the type of person that takes SEC and regulation and that kind of thing extremely seriously. So you need to know those things quite well. But with a team, things get easier. So when you have a few people working with you, you can do what you're good at, they can do what they're good at. You can trust people, it's so much better. Why did I think it was harder? I don't know. It's probably because of the unknown. It's probably fear of the unknown rather than actually knowing it was harder. And so once I started dug in a little bit, again, once I kind of did the research and hired the coach, I realized, oh, actually this is quite doable and not necessarily much harder than single family.
All right. So then what happens sometimes is people swing from, okay, I if I build a team, I can do this, right? But then it swings to some people, like me, for example, we're like, well, I can do this on my own. And kind of maybe you were gravitating because I'm super smart, right? I'm a former software engineer. I'm super smart. I can figure this stuff out. I don't really need help. And so did you go through that at all? And how did you come to the conclusion that you actually did need some help?
I mean, that was probably my biggest fear was partnerships for some reason. It wasn't necessarily, I mean, we're kind of joking here, tongue in cheek, that we're so smart, right? Like I'm an engineer too, but I think it was more fear of letting someone down, or maybe fear that my partner would quit or not show up. Uh, I think you just eventually come to the conclusion that, sorry, my light went out. You come to the conclusion that you go so much further with a team. And having heard that over and over and over from people in the business, I was like, okay, I must be wrong here, which I absolutely was. I mean, again, partnerships are the best. How did I overcome that? Honestly, I don't really know. I think it was mostly just banging my head against the wall, trying to do it on my own, and then realize, oh, okay, someone else is much better at this other thing. Like I can get into that, what I think some zones of genius are, but basically figure out what you're very good at and then figure out what you don't want to do. Find someone who's very good at the things you aren't good at or you don't want to do and partner up. And all of a sudden there's magic. It's like, oh, that person's, let's just say underwriting. So you hate underwriting. There's analytical people out there who love underwriting, but they don't want to talk to anybody. Maybe you're the extrovert who wants to talk to the broker, but you refuse to look at numbers. That's fine. You guys come together and make a team. It's really, really powerful.
What was the biggest shift for you from going from single family to multifamily?
I think that again, another mental shift, another thing people ask about or like are fearful of is raising money or taking capital from folks. That was the biggest shift was, okay, you're actually providing a service, honestly, because it is hard to find um, things to place your money. Again, if your listeners are high income earners, like, well, what do I do with my money? The market's super volatile right now as we talk. We have no idea. The market's probably uncertain. Bitcoin's all over the place. Where do I put my money? Well, I'd like to invest in real estate, but I don't know anything about it. So this is kind of an opportunity for you to give people a service to say, well, I actually do know a lot about real estate. How about you invest with us and I'll give you a good return in most cases. and let's try it out, you know? So the biggest obstacle or maybe the biggest change was using other people's money as opposed to mine, or maybe a bit of both, right? So that was a challenge that I think you have to get over as well.
All right, so that I hear that probably that's probably the biggest concern people have is raising money.
Yep.
And all the way from I've never done it before, I don't know how to do it, to I don't want to lose people's money. I don't want to go beg my friends and family for money, all those things. Like what was holding you back? And then how did you finally like kind of break through?
I mean, just what you said, you're like, I don't want to ask people for money. And then one thing that like I learned probably from my coach, I'll just give him credit, was again, you're not asking people for money. You're semi providing a service. You're like, hey, here, I know that you have some extra money. I know that you're a doctor or dentist, or maybe not, maybe a student. Maybe you have some extra capital and you don't know what to do with it. I really believe strongly in real estate. Would you like to invest with me? And so the mental shift was, instead of asking people or begging people, like you said, it was more of a, you know what, actually, I do know a lot about real estate and I'm really confident what we're doing. I'd like to provide you the opportunity to invest alongside us without having to do anything, right?
And I don't want to raise money for my friends and family, right? Because I'm afraid to lose their money. So how do I not raise money from friends and family? Like what's your philosophy on friends and family?
In my opinion, that's the place to start. I think everyone starts in their inner circle and starts to work out. If you're super afraid to raise money from friends and family, I guess you probably could go after your 506Cs and be on social media and stuff. In my opinion, you're probably going to hit sort of a dead end. I think your close circle are the people that know, like, and trust you. And we say that a lot too. They need to know you, they need to trust you. So it probably will, at least in my opinion, start from that inner circle. So if you're afraid to ask your friends and family for money, maybe you're not a capital raiser. I mean, or maybe that's a fear you need to get over. Again, not everyone in this business raises capital. I'll give you an example. Our asset manager, she's amazing. She still has this fear of raising capital, and I don't think she's raised any money, maybe some to date on our deals, but that's okay. I'm like, okay, that's a fear you need to work through, but you're really good at this one thing. So you don't necessarily have to do that either. I do think it's a valuable skill and a valuable tool. I do think, again, like the people who know you, and if you're a person of integrity, they want to invest with you, right? So it's kind of a different look at, instead of asking people, it's more like, yeah, let's join together and partner together.
A lot of times I get people who ask me, basically technical questions. It's like we do webinars and to all this up until this point, we just talked about mindset stuff. We talked about fear of partnerships, fear of raising capital, like fear or anything around that. We never even once talked about how to do something. And a lot of people, they just ask me how questions. How do I find the best market? How do I analyze deals, right? I'm a natural teacher, so I will answer those questions. But what I find is it actually doesn't ever change behavior, because I found that after every how question is another how question, right?
Oh, totally. I think it's more of, again, it's everything comes back to mindset. I think, I mean, you're exactly right. You need to know how. You need to learn but there's all that stuff's in a podcast or a book or a YouTube or wherever it is that you prefer to get your knowledge. The how questions, I mean, I'm just gonna throw out a couple books, like the best ever book or Raising Capital Real Estate. I mean, Hunter Thompson's book it's outstanding. There's all kinds of hows in there. You could just read that book and then there's all those questions answered. Basically, it's more of a how are you overcoming the fears to get there and take action on the things that are laid out in front of you.
Well, now you're fueling kind of the do-it-yourself mentality. Go out and read some books, and then you can do it yourself. Is that enough? Or again, why?
No, I don't think so. I mean, I think, again, if someone asked me what's the number one thing you should do, I'd say either join a group or mastermind of some kind or hire a coach or both. And the both is the absolute like pedal in the metal, gasoline on the fire.
Why do you think that's so important? And at the same time, what happens if you don't do those two things?
I mean, I don't know of anyone, and I know a lot of syndicators. I mean, it's a pretty small world. I don't know of anyone who's had really good success without doing one or the other of those things. And part of it is just one, having someone guide you a little bit along the way. Because there are plenty of how questions. So that does come up. I'll give you an example, like, what do I do to get this lender? Blah, blah, blah. Like there are those things. The other is just, again, like someone saying, you can do it and here's how, and I'm no different than you. We just take these steps. The other thing is when you get to the closing table, or let's just say before that, you have a deal under contract, the broker is going to say, what experience do you have? And you say, ooh, none. Or I've bought some single families. You kind of need someone to say, yeah, I'll be a KP with you, or I'll be a co-GP with you, or both. And I'll help you get across the finish line with lending and help provide that. So the service I was provided by my coach when I bought my first two deals, he was a KP on those deals. I could have never bought it without him, ever. And I could have never even known how to get to there with all the questions I had. Those how questions are important, but more important is having someone guide you along the way. And then the KP thing, it's almost a must. I mean, you have to have some kind of experience or someone on your team. And so that's why having a mentor or group is really incredible.
I think the biggest difference for me, but going from single family house to multifamily or syndication in general, is this idea of a team around you. Because if you need to try to figure everything out in syndication yourself, you would never get done figuring things out. You will never get done asking how questions, right? There's so many different things you need to figure out, so much time that would be required to do that. But to me, the biggest departure is kind of starting to get more of a team mindset and building your team and leveraging your team and working with your team. It includes your professionals, obviously, but also you talked about a KP or a partner or a mentor, an advisory board of some sort, right? You're putting this team together. And to me, that is really the biggest difference for single family house. And to your point, I think if you learn to do that, it actually does become easier. It becomes a lot easier than you having to figure everything out your own or do everything.
Oh, way faster too. I mean, if you can write an email or you can post in a group a question and you have an answer right away, that's so much faster than trying to track it down, right? So I totally agree. I mean, I think it's the key to success in our business.
So where are you right now? Give me a little sense for kind of where you are in your portfolio and your company.
Yeah, so our company is called Wild Oak Capital. We have just over 1,000 units now. We really started in 2020, which is kind of strange timing. Started in 2019, made our first purchase in 19, but we weren't really kind of rolling. And then COVID came along and we thought the brakes were coming on, but it turns out it was kind of actually a good time to buy. So we continued to buy through 20, 21, 22. 24 was actually a tough year for, I think, for most people. And what's interesting actually to bring this up because in my opinion, right now is an excellent time to get in multifamily. And I've said that on like 10 podcasts. And some people think I'm crazy because lots of people are running the other direction, right? Like there are deals that have gone bad. There is investor capital that has been lost. I'm proud to say we haven't been part of that group, but that's not to say I couldn't have been, right? It's just some debt climbed, some insurance climbed. So what happened is a lot of people kind of got out. And um, I think also now prices have kind of crawled back down to reality given all of the market metrics. So we're really excited. I'm really excited for the rest of the year. This is being recorded in May of 25. Like I think now is an excellent time to get in and learn the business and move forward. If you have any interest in my opinion, there's probably people who disagree. I think it's a great time to be in.
Well, let's talk about that, right? Because there are a lot of people either exiting or worse, delaying getting in, getting started, and it's because there's a lot of fear and what's out in the market as kind of a feeling, right? But why do you say might be actually the opposite?
Well, I mean, I think it's kind of the old like maybe Charlie Younger or someone has said many times like if there's everyone's running one direction, maybe you should run in the other direction, right? But also just coming down to actually factually, I think there's less people doing syndications based on this feeling or fear. You hear people sitting on the sidelines or quitting altogether. I'm seeing that. We make offers. You made an offer in 2022, there'll be like 20 other people. There's best and final, hard earnest money day one, all this stuff. And now we're seeing two, three offers, or maybe brokers even calling us and they say, hey, we've enjoyed working with you. You guys have closed. Would you have a look at this deal? And so there's just a lot of fear. I mean, there's politics stuff that we don't necessarily have to get into either. I mean, there's all kinds of market volatility. And so I think people sort of assume that that's true in multifamily too. And in my opinion, I'm not seeing it. I'm not seeing that to be true. Rates are still slowly dropping. And even where last week there is some up and down, but I don't expect rates to drop too much further anyway. And I also think sellers are now coming around to the point where like, okay, now is I need to get out. let's sell at a rate or a price that works for both parties. And so I don't know, there's lots of things we can dive deeper, but I just think it's a great time to be getting in.
Yeah, it is, and which is hard to do because a lot of people are they're deferring, and I think this is the problematic with investing is going after your feelings, and because gosh, remember in March 2022, the height of the market, everyone's getting into multifamily, right? I mean, so much so where I'm like, man, I don't know, it's getting so frothy, like it's just doesn't make a lot of sense anymore, and maybe it's time to be become more cautious because everyone's getting in. So it almost seems like if you follow your feelings, they're probably almost always going to be wrong, right? I think it's just you got to really look and see what's actually going on. What's the data? What are the actual trends doing? And what are the more sophisticated investors doing? Like you said, a lot of people are going for the exits, but who are those people, right? Those are probably not the sophisticated investors. I think I'm with you right now. We would back up the truck if we could. If we can do more deals and find more deals right now, we'd probably buy as much as we can for the same exact reason. I mean, it's
I
much
think
it's riskier now than it was 2.5 years ago, just to where we are in the market cycle.
I think you're right. I mean, it's probably true, but it's also our challenge now isn't necessarily deals. Our challenge now is raising capital. For that same reason, people are sort of weary holding on to cash. There's this sort of like market feeling. And a lot of folks are saying, oh, well, now could or could not be a depression coming or whatever. It's like nobody really actually knows. We can all look at I think to your point, the best thing to do is look at actual numbers. What is actually happening in the market? Make your decision based on that. It's hard to do because there could be some outlying event or something that you can't predict, but that's always true. That is always true of investing of some kind of risk. So how do you limit the risk and how do you get some sort of edge? I mean, I do think having less people in the market, less buyers is a great thing for us, but there's always going to be some risk. I think just basically come back to your point. If you look at the facts of what you believe, that's probably a better indicator than your gut, like maybe not even gut, but like your emotion, right?
I mean, a lot of it has to do with educating your investors, right? So, and how do you do that? Like, what do you tell them? Why do you say? Because investors are they're typically numbers people, right? What do you? How do you try to convince them?
I mean, me personally, I just say, look, I would rather have my money, like we just said, in real estate. There's always a possibility you could lose money. But looking at the market, that volatility right now and all kinds of stuff that's happening in the political realm, to me is a much more volatile place to place your money, at least in today's environment. So it depends on what we're talking about specifically. But if I'm basically kind of saying, okay, what's the difference between investing in stocks right now, which you may in your 401k or whatever, or taking some of that investment money and putting it in real estate? In my opinion, if you look at market trends of best and worst times, I like real estate for both of those. And that's how I just try to compare them. If it's a different story, if we're talking about specific only real estate, then real estate versus the stock market. But I mean, the other thing too is I think sometimes people forget to look at the entire big picture. So let's take you have your money in the stock market, you make X dollars, whatever, you exit. And then let's say you have X dollars, you put it in real estate and you exit. What did that money do over time and where did it fluctuate? And what were your tax benefits? How much did you pay in taxes over all those years? There's all kinds of things you can look at that, for my opinion, real estate just outweighs most other investments for the risk that you're in it for.
Yeah. So what's next for you? Next year or two? Where are you guys want to take your company?
We're buying. So we have deals in a contract, and like I said, we're kind of bullish on the market. So we're going to try and grow. I believe in pretty slow growth. I'd like to buy 4 to 5 properties a year. I mean, if there's an opportunity to buy more, maybe, but we're just kind of like slowly acquiring, slowly growing. I really love multifamily. So that's the ultimate goal.
That's awesome. Eric, how can people connect with you, find out more about what you're up to?
Love it. Yeah. Eric Nelson Coaching is me on Instagram. That's probably my favorite social media place. Or you can look me up on Facebook or ericnelsoncoaching.com. You can find out a little bit more about me or our company's Wild Oak Capital. So those are 3 places you can find me. And yeah, I'd love to chat with anybody for sure.
Awesome. Well, I love talking to you about your journey from single family house to multifamily. So hopefully that helped other people kind of make better decisions as we move forward. So thanks for being on the show today.
My pleasure. Thanks for having me.